Hello friends, welcome back. Now we're going to look at the first problem from cash management. And you know that cash is one of the working capital and it is the most liquid of all current assets. And here we need to prepare a cash budget. Now every firm prepares a cash budget. And this is a problem where we have to prepare a cash budget giving uh, the the information. So from the following forecasts of income and expenditure, prepare a cash budget for the months January to April 2012. So the months are given: November 2011, December 2011, January 2012, Feb 2012, March 2012, April 2012, as well as the sales. Now sales, everything is credit, as well as purchases also credit. You have wages and other expenses and some in additional information that will help us to solve this problem. Now in a cash budget consists of two aspects. One is the cash receipts and the other one is the cash expenditure, or the expenses or cash payments. All right, now how do we prepare this cash budget? Let's look at it. Okay, so preparation of cash budget. All right, so we have to prepare a cash budget for January to April. So Jan, Feb, March and April. All right, so the first thing is we have to show the balance of cash on 1st January is 15,000 rupees. So show here the opening balance, opening cash balance as on 1st January 2012. So the opening balance is 15,000. All right, now show the cash receipts. Remember, we are only dealing with cash receipts and cash payments. All right, now, so what are the cash receipts? We have to collect cash. Where are we going to collect cash from? We're going to collect cash from the sales, from the debtors. All right, and sales, all the sales is on credit. Now, it's the first one is the customers are allowed a credit period of 2 months. That means debtors, okay, are allowed a period of 2 months, 2 months to pay back the money. That means, please listen very carefully here. That means the sales of November will be collected in the month of January after 2 months. The sales of December will be collected after 2 months, that is in February. The sales of January will be collected in the month of March after 2 months. The sales of February will be collected in the month of April. The sales of March will be collected in the month of May. And sales of April will be collected in the month of June. But since we have to prepare cash budget only for Jan, Feb, March, April, we are not concerned with May and June. All right, so what are the receipts? So receipts are collection from debtors. All right, so you're going to collect from November, you'll collect that money in the month of January. For December, the sales of December you're going to collect in the month of Feb. The sales of January you'll collect in the month of March. And the sales of Feb you'll collect in the month of April, 40,000. Wait. Yeah, 30,000, not 40,000, 30,000. All right. The sales of Feb will be collected in the month of April, 30,000. All right. Any other collections? I don't think there's any other collection. So we close it here. Okay. So this is your total cash receipts. Show that as A. So 15,000 plus 30 is 45,000. All right. Now, next is cash payments. Now, what are the cash payments here? Now, we've made some purchases, everything is on credit, so we have to pay back, right? When are we going to pay back? So it says here, see number 4, the suppliers allow a credit of 2 months. Who are your suppliers? Your suppliers are your creditors. So they've given you a credit period of 2 months. So after 2 months, you can pay them back. All right. So you've you've made purchases in November, 15,000. When are you going to pay? After 2 months, right? So you'll pay in the month of Jan. For December, you'll pay in the month of Feb. For January, you'll pay in the month of March. And for Feb, you'll pay in the month of April. All right. So payment to creditors. Payment to creditors. All right. Payment to creditors. So what is the purchase of in November? It is 15,000. So that will be repaid back in the month of Jan, 15,000. Okay. And for the month of December, 20,000 you'll pay in the month of Feb, 20,000. And for the month of January, you'll pay in the month of March, 15,000. And for the month of Feb, 20,000, you'll make the payment in the month of April. All right. Then what else? You have wages here. Payment of wages. All right. So you have to pay your wages also. Outstanding wages. Outstanding wages. Okay. Now it says here that wages are paid on the 1st of next month. That means the wages of November will be paid in the month of December. The wages of December will be paid in the month of Jan. For Jan, you'll pay in the month of Feb. For Feb in the month of March. March in the month of April, and so on. All right. So wages are paid on the 1st of next month. So that means wages of November will be paid in December. December to 3,200 will be paid in the month of Jan. And the month of Jan, 2,500 you'll pay in the month of Feb, and so on. So 3,000 will be paid in the month of March, and for March you'll pay in the month of April. All right. Next, you have expenses, other expenses. Let's call them outstanding expenses again. Okay, expenses. Now, time lag. By the way, it's not TIM, it is time lag. In payment of other expenses is 1 month. Again, just like wages, you make the payment in the following month. So payment of November will be made in December. Payment of December will be made in the month of Jan, and so on. So this will be 2815 2690 2820 and 2890. All right. So there. What else? Now we have capital expenditure to be incurred. Okay. Purchase of plant, capital expenditure. Purchase of plant. That's a capital expenditure. And when are you going to make the purchase? Purchase of plant on 15th Jan. 5,000 rupees. Not only that, we have payment of dividend also. See here, payment of dividend, 10,000 rupees payable in April. So again, another expense. So payment of dividend, 10,000 rupees will be made in the month of April. All right. What else? A building has been purchased on 1st March and the payment to be made in monthly installments of 2,000 each. So a building has been purchased on 1st March and the payment to be made in monthly installments of 2,000 each. So that means since the building was bought on 1st March, we're going to make one payment and we're going to make another payment in April. All right. So that is monthly installment. Okay, for building. All right, so it'll be 2,000 in the month of March and another 2,000 in the month of April. Anything else? I think that's it. We are done with the payments. So let us find out the total. So the total payment will be B. All right. So add up 15 plus 3,200 plus 2,815 plus 5,000. That will add up to 26,015. All right. And now we also have to show the closing balance. Closing cash balance. And how do you find out the closing cash balance? A minus B. This minus B. So 45,000 minus 26,015 is 18,985. And this becomes the opening balance for Feb. So 18,985. So when you add that with 35,000, you'll get 53,985. All right. Again, add this 20,000 plus 2,500 plus 2,690. You will get 25,190. So this minus this, you will get 28,795, and this becomes the opening balance for March. So 28,795, and you add that, it'll be 53,795. Okay, now add up all your expenditure. All right, so that will be 15,000. So 22,820. So there will be 22,820. So deduct this from this figure, you'll get 53,795. 30,975. All right, and this becomes the opening balance. So 30,975. 30,975. Add 30,000. You'll get 60,975. 60,975. All right. Now add all this. So 20,000, 2,400, 289, 10,000. This will come to 37,290. So 60,975 minus 37,290. You'll get 23,000 685. So there you have the closing balance, closing cash balance as on April. All right. So now this is a very simple problem on how to prepare a cash budget. All right, and of course I will put a link in the description box below where you can get the image, JPEG image of this particular problem.